Using the Aroon is relatively simple and can be broken out into two main categories, with a third tidbit of information that it kind of provides as well. The first category is going to be just paying attention to the crosses that the Aroon is providing us. That means if we look at something like right here on the chart, where the Aroon upline in this case, which is our blue line on this image, our blue line crossed above our orange line. You see how the orange line was actually up, which is our down line. It was above the blue, then came down, crossed below as the Aroon upline crossed above it, working its way higher. So basically, they just changed hands. The lines crossed over themselves. Well, if the blue line, which is the up line, if the up line is crossing above the down line, that in and of itself is a bullish trigger. The lower the down line goes, the less resistance we can think that the market is going to have to our bullish move. And the higher the upline goes, the more power our bullish move has. So when we look at this cross, if we follow it directly up, we can see that during this period in the market, we began a powerful bullish run. So we had a nice bullish activity here. We had nice bullish activity after the cross occurred. And this is just the simple concept behind paying attention to the Aroon lines. Obviously, we would like to use price action in conjunction with this, but this can provide very easy ideas as to where we may be interested in buying or selling in the market. If we were to be selling in the market, then we just want to see it happen the other way around like we had happen here. So we had the Aroon down line and the Aroon up line cross again, but this time the Aroon up line is going below the Aroon down line, and the Aroon downline is going well up here to the 100% mark, indicating a strong bearish trend with little fight at this point from the buyers as the Aroon upline reaches zero. So if we follow this up, we can see that we had a very powerful bearish move after this bearish cross. And there is a third tidbit of information, like I mentioned, that can be pulled from the Aroon, and that is maybe times when we probably shouldn't be trading, and that is when these lines run parallel to each other like we had happen here. This is a case when they're not intersecting, but they're both falling. When both of the lines are falling and they're running parallel to each other, this usually is occurring in a time where the market is in a consolidation phase and not a lot is happening for one direction or the other. And as a trader, what we want ideally is the market to move. Whether it's in one direction or the other, we need that movement. So we usually don't prefer times where the market goes straight sideways.